Hello and welcome to today's NinjaTrader ecosystem event, How to Spot Critical Turning Points in All Markets. My name is Thomas and I'm a platform representative here at NinjaTrader. Now, before we start the webinar, I have a few housekeeping notes. Now, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on the screen. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategic backtesting, and trade simulation. You can get your free account by clicking the following link on the screen, then clicking Get Started under the Welcome section. And before I turn the mic over to Paul and Matt, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than one's initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And please remember that these trading solicitations are not a solicitation or recommendation, but simply educational in nature. Now, thank you again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Paul and Matt. Take it away, Paul and Matt.
So thank you very much, and welcome to How to Spot Critical Turning Points in All Markets, presented by Paul Levine of Stealth Traders. And we just want to reiterate the risk disclosures. Futures trading is very risky, and past performance is not necessarily indicative of future results. And with that, I'm going to hand it over to Paul Levine.
Thank you, NinjaTrader, for sponsoring the webinar, and welcome everyone. I appreciate your attendance. So let's look at the screen you're looking at right now is how do we use our algorithms? It incorporates chart analysis, which is what you're looking at right now in this chart, with price visualization. There is zero lag in all of our studies. Some of them actually can predict the next bar, which way it's going to go. And it's designed to monitor institutional trading. So what does that mean? So institutional traders create the volume and the magnitude on which way your trade's going to go. They use AI, they use machine learning, they use AI and machine learning. They also use high frequency trading. These create future data sets. And that is a pretty technical term, but what a future data set is basically, if you follow my cursor, like where this price is going and how they actually create that. And our system follows that and gives signals. And the signal that I'm going to talk about today is the only one you need. It's just one single signal, whether you're an institutional trader, whether you're an intermediate trader, advanced, or just a beginner. You can use this signal, and we will go over this as I explain all the different studies and how the algo works with that. And it's very customizable. This is out of the box, a very customizable that we present today, but any institutional trader or personal trader can contact us for even further customization. So with that, I'm actually going to look for these particular turning points and signals in the market. What's important to understand is the zero line, which I wrote in here. This was today's market. This was a live market today. I guess it's still jumping around a little bit. So I want to show you in real time what happened today and where these signals are created and how we utilize them. So let's just go back. Well, let's just look at, and there's no rehearsing here. I just do it straight as I see it so you can understand it. This is a study tool. If you look at this over and over again, 5, 10, 15 times, 100 times, each time you look at it, you'll become a better trader. The percentages will be in your favor. I was always asked, well, how many times should I simulate trading? And I said, well, if you do it 50 to 100 times, you'll be better. But if you mark down 1,000 simulated trades, you'll be a much better trader than if you did 50 or 100, whether you just jump right in. And the NinjaTrader platform has a lot of tools to help you with that. It has, so whatever I show you here today, it's fractal. It works on anything, any time frame, range, Rinko. If you don't think it'll work, it will work. The playback connection. So that will give you today's market in real time, and you can practice this move that I'm going to show you today, which is the postal move. And that's right here. Postal move. We actually had on posted on our Twitter accounts and our social accounts this actual move in a live market. And you can see here where I highlighted. So what a postal move is, it's when the hyper snapback line, which is red and green, intersects or punches through the white and yellow. And as you can see right here on this bar, it punched through and the market just shot down. And we're going to show you how to actually set this up with multiple time frames. I prefer that you use at least 3 different time frames. If I've had some customers ask me, well, what should I use when I want to trade for a really long time? I said, well, what's a really long time? I said, well, 4 hours. So I said, use a day chart, use a 4-hour chart, and use a 30-minute chart. And simply what you want to have is on the 30-minute chart where the hyper snapback line punches through, where they're all going in the same direction. And basically, if it was a short here, everything's red that you can see. Also, another really great point is I have this actually on a chart because the money velocity only works in real time. And you could see here on the money velocity, you'd want to make a note here. Write this down, it's very important. This gives you actual money being injected into the market. So the green were buys, the sells were red, or it's a bid ask. But the green, the blue bar, which is a difference bar, whichever direction that bar is injected into, per se here, the red, this is why it accelerated down. And then you can see here as the trade kind of subsided, you had injection going the other way. So there's a visual representation of why this dropped. And these are institutional traders doing that. And we just track that. And the postal move, it delivers.
So, Paul, someone asked what time frame this chart is on.
This was a 5-minute, but we'll look at, and this was actually the 6E. That was a week or so ago. You can look on the Twitter or Instagram where or stock tweets when it was released, but that was a 5-minute. And on the 5 minutes, since that was brought up, so that individual or anybody else, the 5-minute chart time frame, the institutional traders use that to set up a lot of their algorithms. And we'll get to that in just a second, but we'll actually look at what happened here, and this is the live market. And towards the end of the market here, this is what I'm in the Pacific Coast, so this is 10 minutes for the market's closing. Now look, you almost have a very similar move to what I showed you on the 6E. So what's happening here is the wave counter is drawing a wave down, because what happened, and remember, you want to have patience. Patience is the key to everything. Patience gives you accountability and discipline. If you miss a move or you were stopped out, don't chase the money. There's always going to be another setup. So right here, I'm going to highlight this, a postal move. This is the ES, this is a 987 tick. So I utilize the 987 tick with the 5-minute and the 512 tick. Sometimes I'll run a minute there. So I like to have a combination. You can throw in a wrinkle there if you want, or a range. It'll work. It will show you this postal move. So you can see here what's important. The zero line, once price, and this is following price, the hyper snapback line, pierces the zero line. So now you're in a downward trend. This came off an actual session high today, but this is a failed new high. And failed new highs and failed new lows are the hardest things to actually spot in the market. So how is this a failed new high? This actual dynamic target study, this algorithm, the thicker dotted dash line is the session high. And that's pretty significant. It also drew in real time a dynamic target line that also failed earlier, which was here. So you basically have a double top failure from this dynamic target to here. It doesn't go up, and then it creates another dynamic target line, which this is support to go up or resistance to go up, and it starts to fail down. So you're just waiting. You're not going to go long or short until it gets out of this zone here, meaning it's above the zero line. So above the 150 is a buy zone. Below the 150 is a sell zone. So being patient, you don't want to just jump right in here. Let the trade prove itself. So you're watching your studies. Now at this point, when it crosses the zero line, what's it doing? It's all red. Everything's red. So we visualize for you and coordinate with you with this wave pattern, which is red and it's down. That's a wave one. That now you want to go short and you want to consider that. Now you have right here, as it pierces the yellow and white, you also get a sell signal. So if I line that right up, so you're short right here. And that happened 10 minutes before the market closes. This is what's so fascinating and amazing about the system. You can trade it at any time. Some say, oh, don't trade at 12:30 or half an hour before the market closes. You can trade this all up to closing because it's going to give you these signals over and over again. And this is all you're going to look for. That's what we're talking about today. This is all you're going to look for. Even on this shorter downward movement here, you can see it pierces. There's your short. Kind of comes up and is dragging. That's why I showed you the earlier, well, that's not the chart that I actually showed you. That sideways motion, which we call a chop box. And you don't trade this. You don't want to trade this. And it does that in real time. So if you had some trades today, you can go back and review them. And you'll see that the trades that were looking for the velocity and volume with multiple time frames that prevents you from getting into a cross market, because here you have red bars, green bars, red, green, red, green. You don't want that. You don't want to trade that because you're most likely going to get stopped out. There are more advanced ways to trade that, but that's not what this webinar is about. And you can see right here. So here's another move. It doesn't go below the zero line. It shoots up through and kisses the yellow and the white. So it pulls back. This is how you actually quantify and set up the trade. Do I jump in right here? Oh, maybe I get stopped out. Now, normally on the ES, I use between a 7 and 12 tick stop, and that would be below the candle or above the candle. So for example, right here, I see the postal move. This is what I'm looking for. And it's just a formation. You know you're going long. Why? Because you're above the zero line. So I'm looking for this type of formation where the bars, and it could be any bar, volume, Rinko range, tick. You can see as the wave counter pulls back and pulls up, it actually gives you a buy signal right here. And you have this pattern. I just brought it out to accentuate it. And then it goes up. So there is some percentage there for you. Be flexible. Don't just be be long or short. You be flexible in the market. You have to roll with all the punches that the market gives you. You're an arena. This arena, you need tools to be able to be challenged in this arena because you're just a little guy here. Or if you're an institutional trader sitting on this webinar, you can utilize these tools also because this postal pattern is created by you. Institutional traders create these bigger moves. So here's one up, here's one down. Let's go back. We'll look at the want to look at the 5-minute. Now you can see on it only shows it live on the money velocity. So let's look at, you almost had an exact retracement. So during the opening here, let's just say in this area right here, I have a really good wave pattern, but I don't have my postal pattern yet. It breaks through the zero line here, which is on my wave 3, which is your stronger wave. So what do you see here? You know right now, I mean, 85% of the battle is won because you're below the zero line. So just keep in mind the 5-minute chart that we were just looking at where we marked off. So notice here on the opening, you have the postal pattern. So the 5 minutes going down, the 333, which could be your trigger to actually enter the trade. So here's your postal pattern. And isn't it interesting that this pattern I've showed you on 2 or 3 different futures contracts? They look very similar. That's why this is all you need. This will get you through where your practice and your patience will bring the percentages in your favor. So as you can see here, as they intersect, that's where you go short. And in this particular instance where I would have my stop, as it's gradually, once your initial stop is, let's say 7 or 12, so how do we manage that? So on these particular bars, I like to do, and that would be behind, as it accelerates down, I move it behind that bar. Now you also, if you don't have an automated system, you can contact our customer support. We can help you with that because we do have different strategies that will move that stop down automatically. And then right here, you'll move it behind that bar. Now the bigger question is here, there's a couple things that are happening here. When it goes into the sell zone, which is this area below the minus 150, that's your sell zone. It actually gives you an accelerated arrow down. So you see here, you have a sell signal, and then this is telling you that we're going down, and then there's a pop-up little pullback. So what I'd like to tell everybody is that this is where I'm going to talk about the momentum band. The momentum band looks at deviations within this actual movement right here, or any movement that's happened before. You don't know what these bars are going to look like, but I can tell you that when you're outside of the momentum band, and this is a really particular note that you should take, it will accelerate. And as you can see, it does. You can see in here when it's in the momentum band, it's kind of going sideways as it's failing. And as it comes outside of the momentum band, it starts to accelerate. Now I also have an ice line here, which is given to you by NinjaTrader. It's a 50 SMA, and you go into your studies, and NinjaTrader gives it to you for free. I set it at 50 because institutional traders, especially on the 5 minute, rotate a lot of their algorithms, AI, machine learning, high frequency off of the 5 minute 50. So remember that on the higher time frames, you didn't have the postal pattern, but if you have all three of those together and you're looking at them, this gives you a much better and safer entry, and it fails the cyan line, which it's we call it our ice line, and that's an ice hole failure. Like when you fall into ice and you break into the ice, you only have so many attempts to come out of the ice, and then it just falls down. And you notice here, there's a lot more red bars than green bars. So if you follow the actual stop, you may have gotten the strategy where your stop's going to put, you may have gotten stopped out, but as this accelerates, you can utilize the momentum band, saying that I won't get out of this trade at this particular point because it's accelerating and it's outside of my band. Meaning that, so what does that mean where it's outside of my band? All these bars are outside of the momentum band here. And you're on the right side of the trade, meaning that you didn't go long here because evidently these green bars here, people went long. This green bar right in here, they went long, depending on and why they would go long. They just don't have my system. But you know never to think that way. So if this bumps you out and you fall the actual, so you've locked in some percentage for you, or you just at some point where you go, I'm in a good percentage in my favor. Let's let the momentum band take me out of the trade. So it changes color here. And that's the two ways that you can actually manage this trade, is utilizing the momentum band where you would have the stop just follow the outside of the upper momentum band here. So as you follow these bars down, and all your patience paid off. This happens fairly quickly. Usually these setups in the futures market happen between 2 and 4 minutes. And you can see right here, look what happened before. Here's another postal move. So you just keep these all in mind. But if we go back, and I think this is what's really important here. So let's go back to the 5 minute. Wow, that was quick. Okay, so remember we didn't have the postal move yet, but everything's red. We're in a downward movement. So this is what I mean by a multi-dimensional market. I have students, customers, clients that they'll trade with 3 or 4 different screens. They may have 8 charts on those screens. We do have on our website the daily chart formations that we like to actually utilize. For example, on myself, I have I go from 2584, 1597, 987, 5 minute, 10 minute, 512, 333, and a 3 minute. And when I'm watching for all these, for example, I would see this with the charts that I just mentioned. I'm going to already have a 512 up, a 333 up. I may even have a 133, and I'm going to see this rotate down a lot quicker. So my fill is going to be on an earlier particular bar. But if you want to wait and let it coincide with crossing the 0 line, so now you have your postal patterns on multiple time frames earlier. That's why we train and try to use at least 3 different time frames. Combination of tick, time, and range or volume, with anywhere from, if you want to trade a daily, that's fine. You can do a daily, because we can even go back and look at that. But so let's look at a little higher time frame. And if there's any questions on that, you can see how we're able to precisely enter that trade where you're not trading with a chainsaw and cutting everything up and getting stopped out. You were really precise with the trade by utilizing the lower time frames that complemented this 5 minute to enter the trade in a much precise entry with a scalpel. You're trading very, very efficient. So let's look at for some of our traders let's look at a 4-hour. I'll have to change the data on that. Let's change that to, and see if they appear. If these same postal move appears there. Now remember, each one of these bars is 4 hours. So that's 2 bars is one trading session. So for example, right here, you're isolating, here's a postal move. It comes up out of the below the zero line, drags the zero line, comes up. It actually gives you a wave count. So any kind of instrument you're trading, futures, forex, options, whatever, you can utilize this, because this will work on anything. And as it pierces up, so let's say you're long right here, you see where your stop's at. I mean, you're in that trade for days. And your money velocity would also agree with that. But like I said before, you would drop down to, let's look at this particular move. And what's nice about it is I'm just picking these out as they would come. We don't know what's going to happen on the next bar, but we know what's happening on the current bar, because the studies don't lag, and they're looking for these anomalies that institutional traders tend to utilize with their data sets. What the data sets do is they confuse you on, should I be long or short? That's where our sideways box comes in. That's drawn in real time with the. Let's go a little bit more right here. So this will be a 30-minute. No, it's I'm going to do a 30-minute. Here's a 30-minute with the postal move, and you just keep going up. So what you see on the 4-hour, you'll see the same on the 30-minute. And we can change, as you can see it right here. This is the only move today that you actually need to look at. Here's a postal move. Here's a postal move. You're being flexible. You're not looking, oh, I'm just going to go short today, or I'm just going to go long today. You have to be flexible with the market. Here, you're kind of on the zero line. This is one of our predictive signals, is the white line with the snapback up, and the yellow line with the hyper snapback up. So if you notice, here you have a failure of an overnight or session high. You pass the zero line. So there may be some volatility in the actual bar, but utilizing, let's go back to, that was a 20-minute. Here's a 30-minute. So it even works on a 20-minute. Isn't that amazing? So these were the actual, on the 20-minute, I was showing you the actual snapbacks. And as you can see right here, as it pierces, it gives you a buy signal. So if you utilize the 30 minutes, so for an hour, you'd be in an upward move. That's an eternity on a futures contract. And then you have So we looked at the 20, here's the 30. So what do you have here? You have a failed new high. You have a failed new high. These are the hardest things to pinpoint in all of trading. And the system makes it really easy for you. So you're waiting. Is it going to go higher like it did here? Or is it going to go up? It retests it, and then it fails. It starts to fail, right? So you're looking at a 30-minute, you may have a 10-minute, a 5, you may have a 1597, 97 ticks. You can have a range, and we'll show that right after this. So as it starts to fail, we go, okay, I'm past the zero line. There's the postal. And isn't it interesting that the yellow line, the dynamic target line, and the cyan line, that's a 20 SMA and a 50 SMA. They even utilize that off the 30-minute. I mean, you can historically go back 50 years and they're using these two SMAs. That's why I add them to the system. They're free. You get them from NinjaTrader. You just go into studies, SMA, and you put in a 20 to 50. You can choose the color, but I like to use yellow and blue. And then as it you manage the trade by putting the stops behind each bar, and or wait till momentum band changes, and then you lock in your percentage there. So let's see. So these are where your critical turning points are through the different ways that you use visualization and our technical analysis on this particular wave pattern here. So everything that I've shown you, which is fractal, I've shown you the 6E, which is a euro dollar on a futures contract. I just showed you Bitcoin here. This is on a daily. We looked at the ES. You have
So
a question,
Paul,
Matt? Go ahead.
I mean, someone asked about the tech behind these indicators. So I just want to add that our hyper snapback indicator is exclusive to stealth traders. We developed that, based on Paul's 35 years of trading experience. No one else has the the formulas that we use for the hyper snapback. As you can see with the the postal move, that's just one aspect of the hyper snapbacks indicator that we're featuring now, but there's several other aspects, and of course all our other indicators. I mean, Paul really didn't even have a chance to go into those as well. But we are running low on time, so I just want to share. We have a special for the attendees of the webinar. And hold on, I'm going to share my screen so we can show that to you. Okay, so the specials that we have 25% off all our indicators and our full stealth mode. Now, full stealth mode is a suite of all 6 of our indicators. Use the coupon code. I'm also going to put the coupon code in the chat so you can just copy and paste it for your convenience. The offer is going to expire 4/19 midnight Eastern Standard Time. So those of you who are watching the recording, you'll have time to take advantage of this offer. Plus, Paul is also giving away 2 free 1-hour sessions of one-on-one live market training via Skype or Zoom if you purchase the full stealth mode. So you can get the 25% discount and the 2 free 1-hour sessions with Paul. However, those sessions are limited to the first 5 purchasers. You can just go to stealthtraders.indicators. Also, please feel free to contact us at any time. You can email us, contact@stealthtraders.com. Feel free to give us a call or reach out to us on Skype. And also, please follow us on X YouTube, Facebook, all, at Stealth Traders. We'll also put our link to our website in the chat. And we really appreciate everybody, spending time with us today, learning about our, Stealth Traders system and spotting the critical turning points. And we hope you follow us and take advantage of the special offer that we have for you. And I just want to thank you very much.
Somebody asked if this applies to lease or full stealth mode.
Oh, it applies to the purchase of the full stealth mode. Does not the discount does not apply to the lease. However, what we will do is if you do lease the full stealth mode, and within the first month of your lease, you want to purchase the full stealth mode, we will give you we will honor the discount for the full stealth mode, and we will also take off the payment that you made for that first month's lease. So if you want to lease it now, you'll have a month to decide if you want to purchase it. You'll still get the 25% discount when you purchase, and we will also take off that first month's lease payment if you purchase the full stealth mode within that first month.
Matt, somebody asked what the price is.
Oh, the price for the full stealth mode is 17. The full stealth mode purchase is $17.99. The full stealth mode monthly lease is $2.99.
Well, appreciate. So we're out of time right now.
Yeah, I believe we are out of time right now. It's 2:15. Yeah.
Okay, appreciate everybody attending. And what we always like to say is that, we'd like you to have best of trades, but just, contact us through technical support. You're with us once you purchase anything or lease anything, everything, all the technical support is free. We're here to help you trade.
Right. It's lifetime technical support, lifetime free free upgrades to any of our indicators. Oh, and someone asked about a free trial. No, we do not offer free trials, but we will give that. We will honor the 25% discount and offer if you want to lease the full stealth mode. We'll still, and you want to purchase within the first month, we'll honor the 25%, and we'll take off the lease payment that you made for that first month.
All right. Well, thank you again to Paul and Matt for taking the time to share with us today. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of Stealth Traders and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.